Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm so excited as always to welcome you all to another promising edition. In fact, the last edition for this week on the Forex Morning Mastery. And today being the last trading day of the week, it promises to be an insightful session as we will be preparing ourselves to join majority of market participants as they round off their trading activities for the week and of course ahead of the weekend. And days like this usually has the psychological expectations that anything could happen during the weekend, and due to especially during an era where we have these geopolitical tensions in the Middle East, the Russian-Ukraine war, the Israel-Gaza situation, and of course recently the um, threat from the Iranian government has against the strike by the Israelis over their um, Syrian embassy, which obviously has heightened concerns over what could probably happen. And of course, we learned how the Israeli government had closed down all their embassy across the globe due to the threat. So we want to we everyone is very doubtful of what might likely happen, and I have a strong opinion that we may likely be seeing profit-taking activities happen today, which obviously would reflect on the chart as price action moving in the opposite direction of the prior leading price action. So we are going to be taking all of this into consideration while reviewing the current market dynamics using the historical data to see how we can strategically position ourselves for the next move. My own name is Sheriff Daramola, and for the next 30-40 minutes, I'm going to be your host as we will be delving into the financial market using our basic tools such as trend lines, key levels, and chart patterns only to unravel the potential trajectory for price action today. And in that regard, we shall be, and for those who are just joining us for the first time, would really do not understand what is going on here, you're highly welcome on board. And as technical traders, we usually gather here 3 times in a week: Mondays, Wednesdays, and Fridays to review and, of course, do follow up details on the assets we are monitoring for the week. And my aim here is to help us to understand the current market dynamics so that we can, in fact, use the information we gather here to make our own independent trading decisions. So, I welcome you all once again and uh, implore you to actively engage in the comment section. So, with that being said, here we shall be diving right into the business. And as usual, the first thing we normally do every morning is to keep tabs with the fundamental factors that will be influencing the market sentiment for today. Well, so far since the week began, we have been monitoring 3 financial assets, which includes the US All Spot, the GBPUSD, and of course, my favorite amongst them all, which is the XAUUSD. And based on this asset, we have been monitoring economic features from both the United States and the um, United Kingdom economic docket, though we've been focusing on high impactful event, but for days that do not have any high impactful event, we take it a step further to look at mid-tier economic features to give us an insight into what market participant will be looking forward to. And of course, so far this week we've had series of very high impactful event like the consumer price index, which came in on Wednesday, and in fact the data came in higher than expected. And what is the implication of this? It further tells us how resilient the US economy is, which obviously has dovetailed to high inflationary pressure within the United States economic docket. Now, this whole idea here has knocked out the idea, the potential of the Federal Reserve cutting interest rate anytime soon. Remember, the rhetoric from the Fed officials since last year was a 3-rate cut for the year 2024, but with the resilient US economy, high inflationary pressure, it is very unlikely that interest rate will be dropped anytime soon. And of course, this has further bolstered the US Treasury bond yield, which in turn has affected the US dollar positively across all board except for the gold asset. And we all know the implication of higher interest rate on economies, as it will become more expensive to borrow money, and this can potentially slow down economic growth and reduce inflationary pressure, which is of course the aim of the Federal Reserve. So as a result of this, investors may be less inclined to hold on to non-interest bearing assets such as gold, silver, copper and the like, leading to a decrease in demand and consequently a decrease in price of safe haven asset. However, the gold has been doing resiliently, doing very well since the week, finding new highs, breaking all boundaries, and currently in an uncharted area. And of course, this kind of situation may be attributed to the geopolitical tensions in the Middle East, which usually increase the appeal for safe haven assets. So we are going to be looking at that asset to see how the market has reacted so far, and of course how we intend to prepare ourselves for the last trading day of the week. Then yesterday we saw the producer price index, which could be considered an inflationary data too, as well, as it always measures the average change over time in the selling prices received by domestic producers within the United States economy. And of course, a higher than expected data is expected to bolster the US dollar, while a low reading is expected to affect the dollar negatively. And the data that came in yesterday for the PPI came in at 2.4%, a little bit higher than market expectation and higher than the previous month of February, which came in at 2.1%. Now, for me, the path of least resistance for the US dollar is looking promising, as we expecting price of the dollar to continue to rise at this particular point in time. So we are going to be looking at how that is going to be on the chart when we dive into the current market dynamics. Now, for today, Friday, April 12th, we are going to be looking forward to the publication from the University of Michigan, which is the Consumer Sentiment Index. Now, for those of us who do not know what this is all about, well, this data here gauges the prevailing sentiment and confidence levels of among consumers in the US economy, hereby providing us with valuable insights into potential shift in economic conditions. And it's important for us to note that changes in consumer sentiment can influence spending patterns, impacting various sectors and markets in the United States. And from the data we have here, last month came in at 79.4, and we have market participants and economists expected 79, which is a little bit lower than the 79.4 from the previous month. So we look forward to see what the actual data is going to be on that one. Will it be just as expected, below expectations, or even beyond expectations? So this is the only high impactful event we shall be looking forward to today, and in fact it's going to be coming in about 5 hours from now. So I would encourage us all to mark out this timing so that we can be around to see how the market is going to be anticipating and of course react to this event. And as technical traders, we do understand that the anticipation of such high impactful event has a way of influencing the market sentiment, which will reflect on the chart as price action. So as usual, we are going to be diving into the chart right now to see if we can identify patterns and structures that we will be using to guide to anticipate this event coming up today across all the asset on our watch list. So with that being said, here we shall be diving right into the business, and as usual, the first asset we are going to be looking at this morning is going to be the USOILSPOT. And so far this week we've not really done very well on the USOILSPOT. Remember, we have been buying this asset since the beginning of the week, and at every point in time we buy this asset, we see our price snap back into our entry point, taking us out of the position. At some point we were taken out at break even, at some point we were taken out in a loss, and even yesterday we had a privilege of taking advantage of another opportunity. Okay, that was on Wednesday. We joined the bullish momentum, but after the breakout of the key level at the $85.75 level, we saw the momentum reduce, taking us out of the first position at break even or with a small profit, and the second position taken out in a loss. So it has been very challenging for us on the USOILSPOT since the beginning of the week, and at the end of the day you will see that the market has been more of a range bound structure to further emphasize the prevailing uncertainty going on in this market. Now if you look at the structure closely, let me show you what happened at the beginning of the week that led us into buying this asset. Now, before I go into the details, for those of us who are new here, who are not part of our top-down analysis on Monday, I encourage you to watch that video so you can have an holistic idea into what is really going on in the market and how we got to the point that made us to position ourselves for buying opportunities at the beginning of the week. So right here at the beginning of this week, we were able to spot a range bound structure where price action was initially confined within the $85.35 level and the $84.15 area to emphasize the prevailing uncertainty in the market at that point. And usually whenever we have this kind of range bound structure, we exercise patience, waiting for the market participants to finally make a decision which will either reflect on the chart as either a breakdown of the support line of that range to give us an opportunity to sell, or the breakout of the resistance line of the range to give us an opportunity to buy. And of course we have been joining the breakout of the resistance line at every point in time, but unfortunately we were not seeing the traction continue as expected. And during the course of the week, during the midweek, we were able to identify a structure here after observing what has been going on in the market since the beginning of this month. And one thing you will notice here from an holistic approach here on the 1 hour time frame is how that area between the $84.70 level and the $84.15 area had played a major role in negating all attempt by the sellers to break through that area. As you will see, since last week Thursday, every attempt by buyers to break through, by sellers to break through, has always been met with strong resistance from the buyers, as you will see here, making it a robust demand zone. And of course, due to the fact that price action has been trading above the structure, or that is, sellers have been finding it difficult to break through this area, we label it as a temporary demand zone, at least for this week. And as long as price remains above our demand zone, we have no business selling this asset. So this whole structure here negated any bearish expectation in this market for the week, and we did emphasize here that the only condition that will make us sell the USOILSPOT is for price action to take out that demand zone, break it down, retest of structure to join that decline to the downside. And so far this week, this has never happened at all. So the idea of a bullish momentum is still very much intact at this point in time, and there are in fact a lot of factors behind the scenes which obviously has been supporting this idea, from the rising geopolitical tensions in the Middle East, the Russia-Ukraine war too as well, continues to give lend support as market continues to hold that demand zone as an area to find price cheap enough to join a momentum to the upside. Then additionally, there are other factors too, which of course has also incited bearish momentum through the course of the week. Remember, I mentioned in my commentary this morning that within this all range bound structure, we do have a descending trend line after connecting the series of lower highs, which obviously emphasize the strength of the sellers at this point in time. And why is this happening? Why has the market reacted bearish in that regard? Well, we have the EIA and API report, which was released on Tuesday and Wednesday, and of course we saw a rise in crude oil stockpile, which obviously gives us a sign that there is an increase in supply over demand. And when there is an increase in supply, what happens? There is always this expectation that price will drop to the downside, and this is one of the reasons why we are seeing this continued selling pressure. Then another thing that could be acting as a headwind for oil prices is the narrative of higher interest rate for a longer period of time, and in the United States, of course. Now, remember, we have been talking about interest rate cuts through the year, from January through this month, that there is likely going to be an interest rate cut. But due to the data coming in from the United States, this is unlikely at this point in time. And if it is become evident that there wouldn't be any interest rate cut, this may exert pressure on US oil prices, as the higher cost of crude oil storage will be there will be high cost of crude oil storage, further affecting the price of oil. So with all of these parameters, between all of these factors supporting both bearish and bullish momentum, how do we intend to position ourselves for the next move today? And to answer this, we'll still need to look at things from a technical standpoint, which obviously will reveal how market participants have been behaving since the beginning of the week. Now, we did emphasize that the market, though we had a range bound structure, within the range bound structure we are seeing lower highs, of course, which supports this bearish momentum we're seeing here. But one thing you will notice is that despite the lower highs, you will see that price is finding it difficult to find lower lows, and this is as a result of this barrier around that demand zone we identified during the course of the week. Now, it doesn't make any sense for us to sell around this area unless this demand zone is taken out. So we will continue to look out for buying opportunities around this area, and in fact the levels we identified on Monday still remains very much intact. We have the $85.35 level, our key level at the $85.75 area, the $86.25, and of course the $87 area are all levels we shall be looking out for buying opportunities in this market. So we do have a buy stop order above the structure so that we can capitalize on that momentum to the upside. However, if price continues to drop and stay below the descending trend line, leading to the breakdown of that demand zone, I will only be selling the breakdown retest of the structure, giving me a confirmation before jumping into any sell position here. So this is my simple view on the US oil spot for today. Let's see how the market is going to play out on this one, and of course I will be giving you updates as at when due during the London and New York session if there is any new development that comes in the market today. And it's important to also note that the consumer sentiment index will be on the radar of every oil trader today. As you know, this asset is a US denominated commodity, US dollar denominated commodity, and whatever happens to the United States economy obviously will influence the dynamics in this current market. So let's see how the market will play out. Let's see if we will be able to recoup the losses we incurred so far this week on the US oil spot as the week continues to wind in for the weekend. So if you have any questions whatsoever as regards to my illustration, or you need some further clarification, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in and use that time to mark out these levels accordingly on your chart. All right. So in the absence of no questions, I want to assume that we are all on the same page here. So in that regard, let's move on to the next asset on our watch list. Stay tuned in. So the next asset we are going to be looking at this morning is going to be the GBPUSD, and I can say that the GBPUSD is one of the most profitable assets on our watch list for this week, as we in the last 48 hours have witnessed a decline in the price of the pound sterling, giving us over, I'm not sure how many pips we were able to take on this one. We have about 150 on the first sell position. We have about 5 positions here. We had about 130. The third one here about 820. So we have another one of about 100 pips thereabout. So all of these levels here, we did capitalize on the bearish momentum all the way to the downside, and recently we also joined at the breakdown of the 1.25660 level, which I just identified this morning. Though we at the beginning of the week, it was more of buying this asset, as everyone was thinking that price will continue to rise due to the positive figures that came in from the United Kingdom on Monday. We had the BRI report, which came in positively. We were looking at a 0.8% projection of a healthy United Kingdom economy, which resulted in some bullish track on. Let's look at that quickly. Let's see what really happened at the beginning of the week. So while we were analyzing this chart on Monday, we identified a range bound structure where price action was confined within the 1.26380 level and the 1.26150 area to emphasize the prevailing uncertainty at that particular point in time. And whenever we have a range bound structure identified on our chart, the next thing we want to be doing is to exercise patience and wait for market participants to finally make a decision, which obviously will come either in the form of a breakdown of the support line of the range to give us an opportunity to sell, or the breakout of the resistance line of that range to give us an opportunity to buy. And look at what happened here on Monday. We saw price breakout If you missed out, the market was kind enough, came back to retest the structure, and since that moment we were able to capture a bullish move all the way into the 1.271 area, about 70 pips thereabout. And remember that we did identify multiple levels that we said we will be using to maximize the potential of that bullish move. So we added more positions at the breakout of our key level at the 1.265. We added more at the breakout of the 1.2664 26660 level, and then we added another one at the breakout of the 1.26860 area. So all of these levels were identified during our Monday and Tuesday's commentaries, and of course we moved our stop losses accordingly, and we got taken out with a minimum of 80 pips on that positions. And on Wednesday we did emphasize that the momentum was looking bullish, and with the support of that factor coming in from the United Kingdom, we had this ascending trend line that we said we will be using to guide our trading decisions, and that as long as price remains above this ascending trend line, we shall feel comfortable buying this asset. And the only condition we agreed upon here is that if this ascending trend line is breached and broken to the downside, we will be getting ready to sell this asset. And of course, remember right here during our Wednesday's live session, I did emphasize that this area at the 1.26645 level will be an area to look out for selling opportunities, as if price can break down this level, price obviously would have broken down that ascending trend line, hereby negating any bullish expectations on that market. And if you remember vividly, we had multiple levels that we used to join that bearish move to the downside. It was a massive move. We were able to scoop in a minimum of 500 pips on that one. And you might be asking, why is this? Why did that momentum drop down so strongly? Well, the stronger than expected inflation report in the United States on Wednesday prompted speculations that the Fed may delay interest rate cuts this year, hereby supporting U.S. Treasury bond yield, which obviously has a positive impact on the US dollar. And this led to increase in the demand for US dollar due to the expectation that interest rate will be left higher for an extended period of time, giving an attractive windows for investors to put their funds in the US dollar. And this did not hoggle well with the pound sterling. As you will see, the price of the pound dropped significantly. Now yesterday we had some positive economic data from the United Kingdom. We had what's it called again, we had a report from the manufacturing sector. We also had the UK's monthly GDP report, which came in at 0.3% expansion. That's good news for the United Kingdom. Remember that the two previous quarters, the United Kingdom was technically in recession, as they recorded two consecutive deficit in GDP from that economy. Then we also saw the industrial sector do very well, but these data were not strong enough to support the pound sterling in that regard. Now, with the current situation we have here, it is very important for us to move all our stop losses. If you still have a sell position running at this point in time, kindly move all your stop losses and secure your position, as anything could happen. I have something to show you on the 4 hours time frame, which will be of much interest to you. So let's go into the 4 hours time frame quickly and see something here. So going into the 4 hours time frame, for those of you who are part of our live session on Monday, you would remember, is it 4 hours time frame? I think it's the 4 hours time frame, I guess. Now, if you look at the 4 hours time frame here, after taking into consideration the character of price action since the beginning of this year 2024, you will see that the market was initially going south as price continued to find series of lower highs and lower lows in this market. And when we connected a series of lower highs at the beginning of the week, we saw this beautiful descending trend line that was supporting the the bearish momentum in the market, and not until the month of February. I think the last day of month of February stroke the first day of the month of March, we saw price finally breaking out of that descending trend line. And you know, when we have this kind of structure, it further emphasizes a reversal setup, and whenever price action breaks out of a structure, we expect it to come back and retest the structure at some point in time to continue the uptrend. Now, if you look at the structure closely, you will see after the breakout happened, we saw price action come back, retest the structure multiple times in the last 6 to 7 weeks. Now we saw price coming back, so we saw how it has been difficult for sellers to continue below that area, and following the strong impulsive move in the last 48 hours, you will see that as soon as price came back into that descending trend line, we have continued to see buy pressure resume around this area, giving me a sign that we may likely see a bullish traction coming again from that particular area. And in fact, the last 24 hours has seen a range bound structure around that area, further emphasizing the prevailing uncertainty in the market at that point in time. Now, I want to show you something here again. So let's zoom into the testing of this trend line here. Now, if we zoom close into the structure, you will see that this area, we have been seeing a range bound structure around here, price action confined within a range just exactly along that descending trend line. Now, the question going into the New York and London session today is, will this trend line be respected like it has been doing in the last 6-7 weeks to incite an uptrend continuation? That is breaking out of the 1.2570 area will obviously welcome buying opportunities, or will this trend line be broken to the downside to incite a sell-off at this point in time? So we are at a crucial juncture in the market, so I needed to show you how crucial it is right here on the 4 hours time frame. So let's go back down into our 1 hour time frame to see how we intend to capitalize on the next move. So right here, we still have our sell position running, and I've told you all to move all stop losses. Let's secure this current sell position while we continue to monitor price action below the 1.25650 area. So at this juncture, we'll still maintain a bearish bias, looking out for more opportunities at the breakdown of the structure. And in fact, if I have new levels to, in fact, the lowest point for this week, I think we can still work with this level right here at the 1.25050 area. That's another psychological area we can use to guide more selling opportunities if price action continues and break down below that particular area. So we have the 1.25050 level. Let me place it right there. That's the lowest point for this week. If we can see a breakdown retest of the structure, we will be adding more sell positions to our existing trade. However, if this descending trend line we identified on the higher time frame continues to become a barrier for sellers today, then we will be looking out for a temporary buying opportunity. This is a counter trend move. If you are not a counter trend trader, please stay clear of this one, as we'll need to be on standby to move our stop losses accordingly as soon as price action breaks out of that area. So this is a counter trend opportunity. It could be a retracement of that bearish impulsive move in anticipation of a downtrend continuation. So if price can break out of the 1.255 level, I would like it to capture all most of this high here. So let's just make it around the 1.256. I think that is more of a psychological level, so let's adjust that to 1.256. so a breakout of the 1.256 will be enough to continue an uptrend or a reversal setup around this area. So please, I want to emphasize here that if you are not a counter trend trader, you are not a scalper, please stay clear of this one, because the buy position is not going to be a long-term perspective. It's more or less a short-term view in that regard. So let's see how the market will play out here. And of course, trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 5-10 seconds off. Let's see if there are any questions before we move on to the final asset on our watch list for today. Okay, so in the absence of no questions, we shall be moving into the final assets on our watch list. And for those who are click on the like button, I really appreciate you guys. You guys are wonderful. Thank you very much. I really appreciate from the bottom of my heart. And for those who are yet to like, please, this is the cheapest way you can support this channel to grow. And thank you very much as you do so. So with that being said, let's move right into the final asset. So the final asset we are going to be looking at this morning is my favorite amongst them all, and that is the XAUUSD, popularly known as the gold spot. And as at this point, we are seeing price action hitting an all-time high at the $2,400 area. This has never happened in the market space of the gold. And you may be wondering what is really going on in this market. In the last 2 to 3 months now, we've seen economies like the Chinese, the Kazakhstan, Turkey, and major Eastern European countries have been investing in the gold market, and this has resulted in the escalating price of this commodity. And this must tell us that there is something going on behind the scenes which we are not aware of, that is making these economies to continue to invest on the in safe haven assets such as gold. And one of the various factors we can actually pinpoint at is the escalating tensions in the Middle East, as it appears that this is not going to be winding down anytime soon, as every day in and out we have been seeing more information as regards to attacks in the Red Sea. The Iranian leader says is going to retaliate the strike on the Iranian embassy in Syria. We have the Russian-Ukraine war too also going on at the moment. And before this week, we were looking at uncertainty surrounding the Federal Reserve interest rate decision, which has further escalated the price of gold. Now, although I really did not take advantage of this whole length of bullish momentum, as the momentum started around this area, but some of us did took advantage of this. I got some messages personally as some bought around this area, but I took it right here as I illustrated on our chart, as I needed confirmations that this all-time high had a $2,363.50 level will be broken to the upside before jumping into the buy position. And I hope we all capitalize on this. If you did, well done and kudos to you. Well, the beginning of the week was more of buying as well. We were looking at buying opportunities at the beginning of the week after identifying this structure here, and then we saw some selling opportunities as well on Wednesday's trading session through Thursday, though the second position did not do very well. We were stopped out on that one in a loss, while this first position, first sell position here, we were able to scoop in some reasonable amount of profits here. I think small profits, I think about 10 or 15 pips profit on that one. But finally, the breakout of the $2,063.50 level for me was the point where price action gave me a good signal that we will be going bullish on this one, and thank goodness I was able to place my buy stop order above that structure to capitalize on that move. And for those of us who capitalize on this, well done and kudos to you, as you will currently be running with over 300 pips in profit on that single move that broke out of the $2,363 area. So well done and kudos to you. Now, with this whole situation here, we have various factors behind the scenes. Now we have new developments following the CPI data that came in on Wednesday, which obviously has bolstered the treasury bond yield, and surprisingly enough, we're not seeing that effect on the gold due to the various factors I mentioned earlier. Now, as it is right now, what is going to happen today? How is the CPI, that the result from the CPI data, going to affect the gold? And looking forward to the PPI data coming up later today, what are the chances that price may drop from this area? Well, it is very low. The path of resistance for me is still looking very bullish. But if we consider the possibility that the Federal Reserve might delay cutting interest rates due to the robust US economy and the high inflationary pressure in the US economy, we cannot ignore the potentials that sellers could still have a say in this particular market. So we will be taking that into consideration, but we are yet to have any structure that will support that idea. But if it does along the line, maybe the next couple of hours, I will obviously give us an update on that one. But right now, the path of least resistance is still looking very bullish. So I just identified a new level at the $2,400 area, where I said I will be looking out for more opportunities to buy if price action ever breaks out of that area, and it appears we have a breakout already happened here. So let's see if this momentum will continue to the upside. So we still maintain a bullish bias on the XAUUSD. Now, the only condition that will make me sell or look out for selling opportunities is if I see a valid reversal pattern evolve around this all-time high area. Now, if I'm going to be selling, I would like to see a reversal pattern. Maybe it will come in the form of a head and shoulder pattern, we never can tell. And then once we identify a reversal pattern here, we mark out the neckline of the reversal pattern, and of course sell the breakdown retest of the neckline to join the bearish move to the downside. So that is the only condition that will make me want to sell here. If this does not happen, we'll continue to look out for more opportunities to buy the gold for today. But trust me, I will be with you in the comment section of both my Trading View and Telegram platforms to give you updates as at when due. And remember, the XAUUSD live window will be coming up later today, 5 to 10 minutes into the New York session. Though I'm sorry, Wednesday's session came in a little bit late due to some technical issues we were trying to resolve. But I hope today is going to be as early as possible. So we will be on standby to bring you live the XAUUSD live window. And for those of us who do not know what this is all about, the XAUUSD live window is a platform where we come together to monitor real-time price action during the New York session. So it lasts about 5 to 7 hours depending on the volume of trading activities for that particular day. So I look forward to seeing you all in that on that platform later today. The link to that platform, you will be seeing it right at the end of the session. Once this session ends, you will see the link, you will see the option, click on the link, click on the notify me button so you can get notified as soon as we come on live. So I think it's on this note I've done justice to the XAUUSD, and I do hope that my explanations was quite comprehensive enough. But if you find some you need some clarification at any point, feel free to let me know in the comment section. So I will take the next 10-15 seconds off. Let's see if there are any questions whatsoever before we start rounding off our trading the Forex Morning Mastery for today. And thank you for liking the video, thank you for supporting the channel, and if you are yet to click on that like button, I will really appreciate your support by giving the video a thumbs up, and thank you very much as you do so. So let's see if there are any questions before we finally round off today's session. So I just added another trend line to this current structure that we will be using to guide our trading activity for the day. And this trend line has obviously been supporting price action for a long time now, I think since the beginning of this month. So we have the trend line extended into the current, hold on a second. So we have the trend line extended into the current structure. So you know how we use our trend lines in this community. As long as price remains above the ascending trend line, we shall continue to look out for more opportunities to join the uptrend continuation. But if the trend line gets broken to the downside and retested, then we will be looking out for selling opportunities at this point. So let's see how the market will play out. This should take about 4 or 5 hours before the structure matures. Let's see what happens, and I will definitely be with you in the comment section of both my TradingView and Telegram platform. So I think it's on this note we have come to the end of today's Forex Morning Mastery session. It has been a wonderful moment with you guys. I really appreciate every single one of you and the support right there. Thank you for the likes. I really do appreciate. I see your comment, Adelo Adediran. Good morning to you. Glad to have you around with us this morning. So so far this week, we were able to monitor 3 financial instruments, which includes the USOILSPOT, which we did not do very well on the USOILSPOT this week, as all our buy positions were being taken out at either break even or stop losses at this point. But we still look forward to see if we will be able to recoup the loss we incurred today. So we already have setups we've identified on the chart we will be using to guide our trading decisions for today. We also took advantage of the GBPUSD. We were able to run both buy opportunities we saw at the beginning of the week, and of course the bearish momentum we saw following the CPI data that came in on Wednesday. And finally, my favorite asset amongst them all, the XAUUSD, where we were able to jump in the bullish momentum since the beginning of the week. And I do hope you all marked out the levels and structures we identified on the chart, which we said we will be using as reference points to guide our trading decisions for today. If you did, well done and kudos to you. So all we need to do right now is exercise patience and allow the structures to mature. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, ensure you have a well-defined risk management strategy in place. And for those of you who are joining us for the first time, you're highly welcome on board. I hope you are able to gain 1 or 2 things from what we discussed here today. And if you had missed out on the session from the beginning of the session, don't worry, the live session has a replay. So at the end of the session, you will have the privilege of replaying it to go through what we have done so far today. And I hope you were able to gain 1 or 2 things. If you did, you want to be part of our subsequent editions, as the more time you spend with us in this community, the better you get to understand our analytical approach, which eventually will help you in making your own independent trading decisions. So I look forward to seeing more of you Monday morning, same time, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to start the new week on a positive note. And if you are yet to follow me on this channel, please click on the subscribe button right away, as I will be sharing a couple of videos during the course of the weekend in preparation of our next week. So you want to be having an insight into what we will be looking at for the following week. So with that being said here, I think we have come to the end of today's Forex Morning Mastery session. It has been a wonderful moment with you guys. It has been a very profitable journey so far this week. Despite our losses on the USOILSPOT, at least we had other assets to balance out those losses and of course leave the week on a profitable note. So on this note, I wish us all the best of luck today. I wish you a wonderful weekend, everyone. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye bye.